actually going back to basics, what built her business.
Yes, correct, correct.
So
Yeah, yeah.
interesting, very
Well,
interesting.
But yeah,
Because
we're
we were
doing
talking
well as
about
a
how,
family. We're healthy, thank God. So that's all you could ask for, right?
especially.
yeah,
Um,
yeah,
so Shane, I guess not to dive right in, but one thing that I've been seeing online a little bit from various people in the mortgage industry, I've seen some posts about forbearance versus deferring, and I've
Yeah.
seen that word a lot online lately. And some of the posts that are attached to them are like novels. So I was hoping maybe you could
sum it
just
up.
sum it up and just kind of let us know, because it's in relation to people who maybe can't pay their mortgages
Yeah.
uh, or what have you. So maybe you could dive a little bit on that.
Yeah, and I'm getting a lot of calls from past clients that are out of work and calling me and saying, "Hey, what do I do? Do you set it up?" And they're thinking that I'm the contact. I'm the front end, so I really don't work with people once they get into the servicing department. So this would be a servicing department issue, but for the most part, from what I've heard, they're not getting what you'd hope. What the average consumer would hope is I get a 3-month break, it goes on the back of my mortgage. Most lenders are not doing that. They're getting a 3-month break, but then they want to be paid in full for those 3 months after the 90 days. So that's
Which
what I've
so
heard.
crazy.
Yeah, it doesn't
What
help
kind
you.
of real relief is that? I mean, when you think about it,
Because to be honest with you, the mortgage industry and mortgage investors don't like that stimulus plan at all, because when a servicer is paying, Wells Fargo, Bank of America, Chase, they're paying Fannie Mae, Freddie Mac, or some back end investor that owns the loan, so they still owe a payment. That's why the mortgage industry doesn't like that. Is they'd almost rather probably modify for 3 months, and at least you're paying me something, because I can then
right?
make some type of payment, and the mortgage servicer doesn't have to make the entire thing on their own. And I think that they just don't like that. And ever since they announced that bill, our pricing has become worse across the board based on where the mortgage-backed securities market is. So it really has made a difference on the front end as well, because there's liquidity issues now, and they don't know how many millions of people are going to call them and say, "I'm not paying you for 3 months." So, and if you're living month to month and you can't pay that bill, hey, at least I can push it off till later. At least you can, hopefully something happens and I come up with that money. So it at least it's better than nothing, but it's not a ton of relief. You know.
Yeah, I think people are going to have to be real careful with that, even if they do take that option, that they're going to, take a big bulk payment in month 4.
Yeah.
What happens if in month 4 doesn't go the way they thought for the
Yeah.
next 3 months? People
Yeah.
can get, that's where we've had some conversations on distressed properties maybe being something that happens as a result of this.
Yeah. Yeah. I think we are going to see this with almost everyone that's self-employed and has their own business. Is a photographer, has a wedding type of business, has a luncheonette, has a catering business. Everyone's going to see a dip in their income, right? So
Yeah.
therefore, my team and I have said, man, we're going to look back in 2021 and 2022, and people are still going to be saying, well, let's throw away 2020, right? Because everyone's going to see that dip, right? However, self-employed individuals have a really good advantage. Like right now, Fannie Mae and Freddie Mac require us to verify employment the day of the closing. And as long as you're still open, and you're still active, and like your website says you're active and you're still dealing with clients, and they might even do a test call to see, are you still, catering to clients? If you are, then you're okay. So self-employeds are in a better situation right now, immediately, for the next 60 days than W-2 employees that have been put on furlough or laid off.
Well,
So
Okay,
that,
so to
as
that point is because as a self-employed, I can make that up. I am
correct,
controlling.
correct.
I'm a small business owner technically,
Yep,
right? Whereas
yep,
with the employee, that month, if you're not working, you're not working. You're not getting. You're not. They're not putting that on the back end and
correct,
making sure you get your full salary for the year. It's going to
correct.
be a real loss of income. Whereas with self-employed, all right, let's be creative and figure out how we can make that money up in our last
Yep.
quarter. Q4 is going to be key for everybody. in our
You know,
business.
I was talking to a top producing realtor, and she's like, "You better be ready for for the gates to open back up when we're allowed to do business, right? When everyone feels comfortable, we could have a flood of business in every industry, really. I mean, right?
Absolutely.
The wedding business, you know, event planning. Okay, now we're okay to do events, so let's have that engagement party. Let's have that retirement party. You know what I mean? As soon as everyone feels comfortable,
Yeah.
there could be a barrage of business just everywhere, you know,
Well,
as long as people have their jobs, right? As long as people are back to work, you know.
Yeah.
and so to that point is, we've been talking about that with a few of the agents who've been interviewing and other leaders. So with that kind of question that a top agent asks you, what do you think you'll be doing to prepare for
And
that
that, and
kind
that
of?
yeah, and that's what I said. I said I agree with you as long as everyone's back to work, and I don't think that's going to happen overnight, unfortunately. You know,
Sure.
I think some businesses are going to say, all right, let's see how business is, and maybe everyone won't start planning those events. They might say, you know what, let's give it some time for this thing to kind of go away, or a vaccine to be developed or something, you know. So I don't know if it's just going to be turn the light switch and we're back,
Yeah.
um, but
So,
what we're doing is I'm telling them, if you have someone that wants to buy, let's get them pre-approved now, right? Even if they're taking a break, fine. If they're taking a break for a month or two until things clear up, fine. Then let's get them pre-approved. That way we are ready to pull the trigger, because we could have a ton of bidding wars in that, right? I mean, this market could just totally open
Oh,
up, right?
absolutely.
Yeah.
yeah.
I think I think there's going to be, I think there's going to be amazing opportunities on the other side of this. I
Mm-hmm.
think there's some really great opportunities now too, though. I mean,
Agree.
this is like such a good time to be calling people,
Yeah.
touching base, not even call, like texting everybody to just check in, see how you're doing. Do you need anything? Because I don't want to intrude. I know you're probably, and just make sure that you have a tight database, even
Yes.
for for your business too.
Yeah, and it's interesting. My father and I, we're not big investors. Like, I'm the son of an insurance agent, right? He's an insurance agent, so everything is, let's be careful, let's be conservative. So for the last 5 years, we've been discussing, we don't really think it's good to invest in the stock market. We think it's kind of overvalued. But my father and I just put money into the stock market. Like, no, everyone is selling, everyone else is selling, and we said, hey, this is a
Yeah,
good buying opportunity. Like, we strongly feel when things are opened up again, this economy is going to be moving. And it might take time for
absolutely.
everyone to be employed and for us to be at 3.5% unemployment. Maybe we won't get back there, but we feel confident that the economy is coming back. So my father and I, just last week, we both put money back into the stock market for the first time in 5 years. We haven't been in it in 5 years. And
Yeah.
I feel like builders might feel the same way, right? Investors might feel the same way, you know?
So what do you,
Diversify a bit so that when you come on the other end of this, what does come back, we got in when it was at its low.
Correct.
Taking
Correct.
that, seizing that opportunity. Matt, you wanted to say something?
well, no, I was just going to ask, we kind of touched on it a little bit, and it comes back to a question that Jamie Simon had asked earlier in the week, is people who are furloughed right now, or who maybe
Yeah.
are without a job temporarily, could be longer term. What have those conversations been like with clients that you have that maybe have been either temporarily laid off, or who maybe permanently laid off for an extended period of time?
Yeah, what I'm telling them is let's run the numbers. Let's see what your pay stub is going to show, because they're going to ask for an updated pay stub. They're going to check your year-to-date income. Maybe they're not working 40 hours, but they're working 20 hours a week, or maybe they're not working altogether. Let's conquer that up front. Can I take their income out of the equation altogether, and maybe the spouse or the significant other qualifies? I did have two gentlemen that wanted to refinance, but were out of work, you know, and you know, I always say to people, they say, well, that kind of stinks. I'm the one who needs it the most. And I agree. But when you close on a mortgage, like, you're pledging on an official federal document that this is how I'm going to pay this back. And this is my employment now, and this is my income now, and this is how I'm going to pay it back. It's not a relief effort. It's a pledge to pay a loan back, you know? So that it's rough. But I told the gentleman, I said, a refinance makes sense for you. You're saving like $250 a month. As soon as you start working again, call me, you know? Now that gentleman was in the auto industry and works on commission. So that becomes, how long of a break does he have off the job, and how much of a dent does that put in his annual income too? So that's something we have to consider with self-employeds as well, is how much of a dent does this put in their income this year? And well, I guess that'll be a factor in 2021.
How often are you converting a conversation into a refi?
We're doing a lot of refinances, but I can say that most of those people are probably management, middle level management, where they're okay working from home, right? It's not affecting them
Right.
a ton, or self-employed, and it's not affecting them either, and they can prove that their business is still open. They might not be as robust as they used to be, but refinances have been strong, because even though we're not that much lower than where we were at the end of February, but maybe people have nothing else to do and they're not working, they're not out, doing everything they would have done, and they have time to call and get the information.
Yeah.
Yeah. So,
So
so,
just to
and
pivot,
in that scenario, like, I just saved a person $296 a month, going
yeah.
from 30-year to a 30-year, and that, that's extra. They weren't saving a lot of interest over the life of the loan, but it's an extra $296 a month in an uncertain time.
Well, and to that point, just knowing like what's the client's need? Is it a now need,
Correct.
or is it
Yeah.
in the grand scheme of things, I want to cut every cost over the next 20 years. So
Correct. Correct. And
and that
that,
just
and
goes
that's
in. I know
that's
that you're
that's my question number 5. Whenever someone emails me, I tell my team, like, let's email them our questions, like, what is your balance? Do you have a second mortgage? And I get down to, what is your goal? Like, do we want to lower monthly payments? Maybe a spouse just lost their job, or maybe they're both working and they feel confident that they're not going to lose it. And do we want a 15 or a 10-year to take advantage and pay the loan off quicker?
yeah. Maybe in the years where two are working, it's better to have a higher payment, get it, maybe even move to a
So,
15 year and just chunk it out over the next 10 so
yeah.
that it's a little bit lighter on the
Yes.
last 10.
And by
So,
doing that, you can save 60, 70, $80,000 of interest that you would have paid throughout the life of the loan, just big money long term.
yeah, so now while people have time, they should at least be having a conversation with you just to
Yeah.
understand it, and have even a 15-minute conversation with you. Sounds like they can get some knowledge on what they can do with their asset and what are some options.
Yeah. We
And that's
have,
something that
I'm sorry,
I
we have
definitely think that you do a great job at. You have a great demeanor about asking questions and follow-up questions, and then dissect and listening. You have a really great listening ability. So that's important in choosing a financial partner, to make sure that you're hearing what I'm saying, you're asking it back, so that you have real clarity on what the customer's absolute goal is, because you're not making an assumption that they want to do
yeah.
this or that. And I do see that in your industry sometimes you're really fast paced, where they might miss some details that, hey, I was going with what I thought that they would want to do, and it wasn't really listening. So that's something that I think that everybody who's watching should hear about, why I would choose to work with Shane Force specifically.
Thank you. Thank you. Yeah. So
Yeah.
my team has created that, just on that goal kind of concept, we've created, what we call amongst our team, a refinance master list. So I think it's up to like 63 people right now, where we say, hey, what's your goal? What are we looking for? What benefits you, right? So we'll go through a whole refinance analysis with them first and say, it doesn't make sense for you to go to a 30-year, because you only have 22 years left. You'll save money monthly, but you'll be starting the amortization all over again. But once we focus on, okay, a 20-year is the best way to go, what rate is that going to be at? And then we say, okay, it doesn't make sense until 30-year fix gets down to 2.75%. We've never been down there. I don't know if it's going to happen, but Mr. Jones, 2.75%, 30-year, and every day we all look at it and we say, okay, who's close to their target rate today? You know what? Mr. Smith might be close to his target rate, and Mrs. Johnson, let's give them an update and check in with them today. And that's how we've been, we've basically been monitoring the market for our people that are past clients and new clients that have been coming to us, because the mortgage industry right now prices off of mortgage-backed securities. So I pay $50 a month to have a monitoring service so I can monitor that. There's really no free system to do that. So the consumer can't. So we try to do it for them, you know.
Which is
But we
sounds like
establish
what,
in advance what their goal is, you know.
sure, sounds like what, you know, what we are encouraging our agents to how to run their businesses, do a great needs analysis up front, spend that time in a consultative type of relationship with the client to then be able to put them into your database and then nurture them how they need it.
Yeah.
And then when the time is ready, you're the choice for them. We were talking a few chapters back in Shift about lead generation, and the name of the game is collect the data and put them into a system. They may not need to raise their hand right now today, but when they are ready in 12 months from now, or even 6 or 4, you're the obvious choice because you did your work up front in building that
Yeah.
relationship and then nurturing it.
Yeah. Yeah. But like we were talking about before, if someone is looking to buy a home, now's the time to get pre-approved, because if this thing does come back, a good percentage of people are ready to buy right away, right? You better be ready. You better have a pre-approval, because you could look at a home and there could be 6 offers in one day, right? I mean, that's very realistic for when we come back and are able to go out there and look at homes aggressively.
That's a really great point. And get your pre-approval now, get positions now, know how much money you need to have for your closing costs
Yep.
now
Yep.
in, you know, hypothetical situations, so that you have buying power when that home hits the market.
Yeah.
And to that point is, it just sounds like from most of our conversations, we should expect that buyer, it's not going to necessarily be a buyer's market when we get back. It may just stay a seller's market, because buyers will have to be aggressive to make sure they get the house they want.
Correct. Correct. Yeah.
And if they don't have the right team in their mortgage corner, and if they haven't done the legwork that they could be doing now with you, then they could be putting themselves in a position to lose house after house after house.
Yes. Yeah. Or at
Yeah.
least their dream home, you know, whether
Yeah.
that's 1, 2, or 3, you know. Yeah.
I
So,
know.
yeah, I mean, one good thing that Fannie Mae and Freddie Mac have done is they've just this week, they came out with a system where if the seller does not feel comfortable letting the appraiser into the property, they've really been almost like, just, okay, all right, fine. If we have a link that we have to go to, that if we check 2 links to see, does it qualify Fannie Mae, Freddie Mac? If it's a refinance, is this loan owned by Fannie Mae or Freddie Mac? And I would say probably 60% of them have been approved, where the appraiser comes back to us and says, seller's not comfortable letting anyone in, owner's not comfortable letting anyone in. Is it eligible? And I would say like 60% of them have been okay. So there have been some where we've said, nope, it doesn't fit the bill. It's not a Fannie Mae or Freddie Mac type of loan. You've got to do the appraisal, you know? So, and when they do that, they're just opening doors and windows, and the appraiser wears a mask, and, you know,
Yeah.
but that has been a really nice change. Which has made purchases and refinances much easier. Like the biggest obstacle to refinance is the appraisal. And when you don't have to go in and don't have to do it, it really has been.
Now, you see
it's
some of
made it
that
much easier.
continuing after this starts to lift, because I think there are going to be some homeowners that, after, like, the perception of having people go through their house, whether it's an appraiser, whether it's showings, whether it's whatever, there might be a difference in perception once this does lift.
Mm-hmm. I don't know if we'll be so lucky, but that would be great, right? I mean, that would be fantastic, but I don't know if we're going to be so lucky. We had a conference call this morning talking about e-closings, just so everyone could do things electronically. Some states are okay with it, some states are not. A lot of states are trying to push through bills so they can immediately be able to close electronically, and that's something that I think might be very short-lived. But
I think my larger question is, like, what are some things that are happening now that could actually extend beyond once this lifts? Like, whether things that are being done virtually now, like, I feel like the way we're doing business has changed, and
absolutely.
it may continue that way. So I don't know if there's anything that you're seeing that could extend beyond just.
I think number one, I think this, like Zoom conference calling, it made our lives so much more efficient. I know me and my team are going to continue doing calls and meetings this way. It's been fantastic. And really for pre-approvals, if a customer wants to meet and maybe they're going away or I'm going away, hey, no big deal. Like you're going to be in California next week and I'm in Pennsylvania today. Let's just have a Zoom meeting, and this is almost as good as, being face to face. So I'm definitely going to keep this long term and use Zoom. And I'm sure, that a lot of other people feel the same,
I know I absolutely do, because there's a lot of stuff that we don't have to have a physical meeting for. One thing though that has changed, I would think, for you, because it sounds like everything other than this one thing is done online, virtually, at a desk, where then it has to get sent to clients. But if we're able to take the closing part, then that's fine. But just generating clients. So how are you, I guess, adapting to generating new business this way? Are you having meetings like this with your realtor partners, with your database? And is that how you'll continue? Are you looking at this as more of a platform where you can educate sellers, buyers, and agents?
I've never done more Facebook Lives, mortgage updates in the past, in my life than I've done in the past 3 weeks, just because it's a great way. And even Facebook is kind of iffy about showing those to everyone when you post it on a business page. But I've just been emailing it to the customers. Like every time a realtor says, hey, what is going on with rates? I've heard they're all over the place. You know what? Check out this link. I just made this video yesterday, and you can even forward it to your client. And if you have trouble with the link, go to my Facebook page and it'll show it to you. So that really has been great. If I want to get the message across and do something very quickly, that's something I think I'll continue to do as well.
Yeah, well, I'm going to definitely think that at least 1,000 hours will be spent on Zooming during this time. That mastering Zooming and getting comfortable in front of it will probably happen for a lot of us. And so that could be the new way of communicating for the most part. But then it's going to be really awesome to be able to go to that closing table and get in those homes and shake a hand. And
I agree.
Still miss that touch,
I've done a couple of virtual like happy hours with some of the offices. I've done that, and the Keller Williams Basking Ridge has one today.
Nice.
But it doesn't compare to an actual happy hour of talking to people. But it's better than nothing.
You can come to ours. We're going to see what's going on. Rania is going to be making a announcement as to what our schedule is for next week.
Okay.
So how about current business that you have going on right now? How is that? Are you seeing deals staying together, fall apart? I mean, obviously not on your end, but because of the job loss, because of maybe people feeling a little uncertain as to what's happening, the existing business that you have going on, how smoothly is that going?
Yeah, so the appraisal part of it has been easier, which has been great. The approval part of it a little tougher, because you have to justify to a realtor, what does that person do? And wait a minute, have their hours been cut? Let me get an extra pay stub because I want to see what they were making previously and I want to see what they're making now. So that they're doing more research when you normally just look at a pay stub and be done with it. But they're doing more research, and you kind of have to justify more that has this particular slowdown stopped them from working, put a dent in their income, or had no effect. So I just had that this morning, that this new requirement that Fannie Mae and Freddie Mac put in, that we have to verify employment. We get their pay stubs and W-2s. We have to do it in writing when the loan's approved, and now we have to do it the day of the closing. So like my morning was scurrying around trying to help one person, like the person who verified employment at the company was unavailable, right? They're probably homeschooling their kids or whatever, helping their kids or whatever. But they've got to do an employment verification because my client has to close this afternoon. And then another scenario of a self-employed and justifying that his business was still open, and everyone's closing today. So it was a little bit of a a busy time. You never had to do that before. It's insane to try and do it, And when they came out with this, I said to the head of our underwriting, I'm like, this is ridiculous. You can't do it the day before, But
Right.
I mean,
Day before would be fine.
Correct. And listen, if companies are slowing down, the day before versus 3 days before, is that really a difference? I guess so. I guess the latest possible chance you have in the morning of the closing.
Yeah, I mean, it definitely shows that there's a nervousness about that there's a concern there, right? Because they haven't done that before. So, I mean, it's just so uncertain that everybody's trying to protect themselves as much. So we got to understand. But like I said, partnering with somebody like you with that kind of knowledge is priceless.
Yeah,
so,
and basically that happened this morning, and I spoke to my customer, and we put an email together and basically justified, hey, he is still doing business, and here's how he's doing business, and this gentleman was a photographer, does weddings and things like that. He's like, I did a shot in a field last week with a couple that was engaged. We never got closer than 10 feet to each other, so
right.
and
I was actually thinking about doing some new headshots during a time like this, because I have a friend I wanted to be outside, so.
Yeah.
I was thinking the same thing, actually. There's this like park, this lake over by me, and I was like, oh, this actually is a good time to do it.
Yeah.
The perfect time.
Yeah.
So anything else that you're seeing that we should be knowing about this week? I mean, this is a weekly thing that we're doing here with Shane, and so it's great to kind of see week by week. You seem like you've adjusted well, but anything else that we need to know to show our clients?
It's been a good week. It's been a very good week for rates. We're not at record lows yet, but we are starting to quote like 3 1/4-ish, 3 3/8 on a 30-year fix.
Wow.
So we were about, on March 6th, we were at 2.875, 2.99 on a 30-year fix. So we're not at all-time record lows, but we are just, a sniff away from that. So it's been a positive week for rates. I think the Federal Reserve has things under control a little better, but we 2 weeks ago, man, we were over 4%, and things were just all over the place. So it's been a positive week for mortgage rates. 15-year fixed is 2.875, 3%, somewhere around there. So
awesome.
Yeah.
Well, thank you, Shane, for coming on today. Just a quick programming note for next Friday. It is, I think, Good Friday. So Mary Beth and I, it's a Kid Ever holiday, so we will not be on the call next Friday. So we'll continue them the following Friday after that. Now, Mary Beth and I are doing shift calls every day at 11 a.m. So if you want to hop on one and just kind of check in, say hi, we'd love to have you next week. But for the purpose of these calls, next Friday, we won't be having a scheduled call, and then we'll pick it up, I think, the 17th.
Good. Sounds good. Yeah, that's great.
Okay.
Yeah,
I just
Good
want
Friday
to
takes a little downtime.
So
Yeah.
Have a great weekend, and
We so appreciate you. Stay safe. Wash your hands.
Wash your hands. Will do. Mom.
We'll see you next week.
We'll see you.
bye.
Bye-bye.